Hey, Mortgage Coach community, Dave Savage here, and right now I am interviewing Jonathan McKinnies in South Bend, Indiana. What's up, Jonathan?
Hey, what's up, Dave?
Hey, thank you for the time you spent with me when I was in South Bend a few weeks ago. It was great hanging out in your office, recording a
Thanks.
coaching call, and getting to know you better. You've got a great team and a great practice there.
Thank you. I appreciate it. It was great to have you. It was an honor. Glad that you were in the home of the Fighting Irish.
Yeah, no, it was fun. My son had a great lacrosse tournament, and it was really cool playing on that stadium, playing on that field. So we had a good
Yeah,
time.
very
Uh,
cool.
yeah, so let's talk. Well, first, why don't you talk about your mortgage practice, what kind of volume you do, a little bit about your team, and then we'll start talking about your mortgage coach story.
Absolutely. So, been originating for about 11 years. I started back when it was really easy to do mortgages. There really were, no income, no assets. I was cutting my teeth on just the easy lending environment, and kind of tanked on us. And I survived that, did pretty well. I went from the working at a bank to working in a correspondent. So I've been with Hallmark since 2009. December '09, I came here. Started just as a loan officer. I became a branch manager about a little over a year and a half ago. I've got a small branch, just a small branch serving the South Bend area, a couple surrounding counties as well, cities. And I myself am more of a producing branch manager. And so my mentality is lead by example. And so I've got a team of 5 people. I just actually hired a new production partner. And so she's very, very fresh, just 30 days in. But last year we did around 250 units, around 37 million. So in our market, average sale price is around 140,000 in our market, and so it's pretty good numbers, pretty good units for us, and we're striving to continue to grow that number and do some good things. So I've not really historically been a mortgage coach user, and I just started because our company implemented mortgage coach just at the beginning of the year, and so I've been trying to retrain my team and myself in having a new way of presenting their a client's mortgage options, and I'm really just into it. I'm learning it. I wouldn't call myself, as we said before, I'm not a power user, but I am someone that sees that even though I've had some success, I can see my success continuing to grow even more because of Mortgage Coach. So I'm looking forward to really digging deep into it.
Well, I love it. And this is a different interview because I interview top producers all the time that are, among the best in the country, which you are clearly one of them.
Thank you.
Usually when I'm interviewing them, they've done, 500 or 1,000 total cost analysis. So they're just
Hmm.
experts at our product. But I thought it would be really fun to interview you because you are just coming out of that. I call it the zone of pain, where
Yeah.
the first 20 times you create a total cost analysis, it's not faster and easier than what you already do. And
Right.
the first one, I mean, while we have a beautiful technology, it's easy to use, easy to learn. Nothing is easy to learn. I mean, everything that you have to change your habits about, is it easy? So I think you're what, about 30-ish total cost
Correct.
analysis under your
Yeah,
belt?
about 30.
Okay.
Hmm.
Okay.
Right.
So for everybody watching this, you're talking to someone who's very experienced, very successful. It's new with Mortgage Coach. We're gonna interview you again in a month, and we're gonna tell this story on how you're adopting it, how you're building the habit. So let's talk about why. Why you're super successful. You are killing it without Mortgage Coach. Why did you decide to make it a team requirement and start building a habit around it?
Well, I think that it's actually sorry, my phone is ringing in. I think that it's a requirement because it makes you different than the ordinary loan officer. And a lot of our business comes in from people who are, they don't know you yet. And from my standpoint, I can do 2 things. I can, number one, build instant rapport with a client when I really couldn't do that my old way of doing things. I tried, you can try to build as much rapport as possible. You build it with the referral source, but to try to build it with the consumer, who a lot of times the consumer is doing a lot of the research already online. they may have been referred by your trusted business partner, but that trusted business partner can only go so far in cementing your relationship with that client. And so having the video on the Mortgage Coach presentation is just awesome, very important for me. And number two, having the tearing down any walls of feeling. Sometimes I think consumers feel as though the lender isn't transparent. And I think with Mortgage Coach, you can be as transparent as possible right up front. And so from my standpoint, it's a way to educate, be transparent. You're not hiding anything. You're doing everything above board. You're being honest, and you're also building that instant rapport up front. And so from my standpoint, I think it's an awesome value add. And not only that, I feel like it's a value add to the referral sources, because I've been implementing when I'm doing lunches with my referral sources or coffee appointments or lunch and learns, showing them the information that Mortgage Coach provides, so they can see that there's something different about us. We're not just an ordinary loan officer team. Although we do a great job outside of Mortgage Coach, it's a way for us to show, man, they are just a notch above. It's giving them the wow service. I think that's what it is. It's more of a wow factor, and it's showing everyone that we really mean a business, and we take our business very seriously, very professionally as we approach it. So that's how I see it.
I love that. So remind me how many families you helped last year again, like just to remind me on the number of transactions you're doing.
Yep, about 250.
So you closed 250 loans. In terms of loan officers in your market, how do you rank? Like, are you top 2, top 3, top 10?
I would I can't say for sure, but I would say we're probably in the top couple. Yeah. Mm-hmm.
I think you're number 1. But anyway, whatever
Thank you.
it is. Yeah. So we're talking about a guy here who's already doing over 250 loans a year, who's one of the absolute best, not in his company, but in the market he serves, and he's trying to get better. So first of all, I think anybody watching this, make note of that. And then also notice when I asked you why, transparency, it's better for the borrower, it's better for the referral partner. I heard you say things that you thought you could become more effective and leverage time. So you kind of had it all. It's going to save me time. Mm-hmm. It's going to be valuable to all my customers, and it improves our overall transparency. So anybody who's watching this that's on your path to building the Mortgage Coach habit, you really need that much why to get through and build a habit. So let's do this. So you're 30-ish. Let's go back to your first 5. How much time was it taking you to create a total cost analysis, and how much time is it taking you now? And then let's kind of close this conversation with some ways to even get better for yourself.
Right. Yeah. When I first started, number one, you were just kind of learning the implementation of Mortgage Coach with some of the systems that we use already, like Encompass and Optimal Blue and how it's integrated. Not everybody has that, but I know we do. And so learning that and just building some of the templates within it was kind of the big thing, just making sure that my costs were correct. So that's what I had to do. I had to slow down, because I'm big into being as accurate as possible up front and making sure that I've got all the templates correct. And so I've gotten the template set up. It only took a couple of times to do that. And so from my standpoint, I think the purchase TCAs, the total cost analysis, those are a little bit easier than the refis for me, because if I'm calling past clients, sometimes you don't know all that information. And so with purchases, I mean, you can snap those out really quick, because you're getting all that information from the client.
How quick?
Right now, I would say I could do a TC. I just did one for a customer just the other day. It had to have taken me only 5 minutes to do it. And then when I first started, though, because I was building those templates, it may have taken me a good maybe 30 minutes to kind of really feel comfortable with the information, and then to actually send the TCA out and do my recording. It might have taken me a little bit of extra time, because I was trying to make sure I did it all right. And so I'd say maybe 30 minutes or so from the first 5 or so, and then now I can knock them out pretty quickly. It's the refis that I'm trying to learn still, because that's what I'm implementing now, is just trying to get into my past client database now and really dig into sending off more valuable annual reviews, as opposed to just calling them annually, doing an actual annual review that's more professional. That's what I'm really trying to learn now. So
love that. And you've got a team. What are some of the goals that you've set for your team, and how are you managing and monitoring building the mortgage coach habit within your team. So let's start with the expectations and let's start with what you're doing so that it becomes this team requirement.
Absolutely. So for my own personal team, that's one set of standards. Then we've got our branch that I'm managing as well. But let me just start with my personal team. I have every morning we meet 8 a.m. Actually, I'm sorry, 8:30 we meet. I get in at 8 a.m. And so 8:30 every morning we have our review, or just a day review, going over our schedule. And so I've implemented a mortgage coach into our routine, where now when I meet, I make sure that someone from my team is getting my block of annual loan reviews ready at the beginning of the week, so that we can start working through them. And so I've got one of my production partners who will actually create some of the TCAs for me, and then I'm going in there and now I'm tweaking them, because we actually was able to get into a webinar with a mortgage coach to just go through some ideas of what we can do to kind of work the team better, as opposed to me just being one loan officer. What can I do to leverage the team and be more efficient? And so I've got Mary from my team doing a lot of the TCAs, not getting it exact, but just getting them in there so that then I can go in and I can button it up. And that's actually what I'm doing this week. That's one of my big plans this week. But anyway, how we implement it is me setting the expectation up front. So when I'm going into our meeting for the week, or every morning, we're talking about mortgage coach. It's not just me just assuming they know, but I'm going into it talking about it in our meeting, setting the expectation. I've told them that our goal for the team should be to have at least 75% of our customers going through a total cost analysis, which would be an awesome number for us at this point. I know it would be greater to have more, but right now, if we can get up to 75% TCAs for all of our clients, that's our goal.
Got it. So it is what it is. So first of all, you've got, as a leader, a clear and compelling why that took you over a couple minutes, your words. You've got a goal of 75%. You've got a rhythm you've got the whole team involved. You're talking to them on your morning huddle. This is a topic. How are we doing on mortgage coaches? Any stories that you can think of, like over the 30 that you've done, where you either won a tough rate shopper or a family was coming to you thinking one thing and they changed what they were thinking because of the total cost analysis? Anything come to mind?
Yeah, I've got multiple stories, but one in particular just happened. Actually, I just locked him in and submitted them on Friday. And he was just a rate shopper. In times past, when I had rate shoppers, most of the time I was very quick. I didn't really care, because I was thinking, this isn't the type of person that I want to work with. I want somebody that's more of a warm referral. It wasn't that warm of a referral. So the client's coming in from out of town, joining the University of Notre Dame, actually. And he said, I've got a great relationship with my local bank where he is now, where he's coming from. He's in Maryland, and he's coming to the area. He's got a very good relationship with the bank that he's with. And the real estate agent simply said, call Jonathan, because he's a local loan officer. He just said, you know what, I've just told to call the local guy, just what's your rate? And so what I did is I went through a little bit more of a script. I said, hey, you refer to me for a reason, because we take our time. We try to be a little bit more thorough up front. And so I'd like to just ask you some questions, ask him a few questions, just to get enough information so that I could do a TCA for him. He said, I just want your 30-year rate. That's all I want. And so I didn't right away give it to him. I said, I would love to give that to you, but I also want to give you a full analysis of your costs, not just the rate, because there's more to it than just your interest rate. And so I like to know your short and long-term financial goals, and I'd like to know what your payment objective is. And so what I did is I got all that put together. I says, here's what I'm going to do. I don't need to take a loan application. I'm not going to be a hard sell. I don't want to pull your credit. I'm just going to put together an analysis. I did that, gave him a 30-year, a 15-year, and a 7/1 arm. He was really hovering toward the 30-year up front, as I said. After I sent that to him, he was just wowed by it. He says, I'm going with you. I want the 15-year term. I noticed on that worksheet that it's showing how much I'm saving. And so we locked him in at a 15-year and got the business, got his application started just on Friday, got all of his documentation in, and we're moving forward. And it was all because of the total cost analysis. It was awesome. Yeah.
Well, wait a minute. First of all, it was because you had the why, you built the habit, you went through a little constructive tension with the guy, hey, yeah. I want to do what's right for you. You got him to answer some strategic questions. And then, of course, you put it in the total cost analysis, and we helped you present it. But kudos to you.
Thank you.
That's yeah. Awesome. And so a couple takeaways. First, if you're watching this call and you're closing less than 8 loans a month, and you're saying, I don't have time for mortgage coach, I really ask you to rethink that thought. Here's a guy that's doing 250 loans a year. Do the numbers on how many he's doing a month and how many pre-quals a month. You can make time. And I also make the promise that once you learn to use Mortgage Coach, it will save you time. By the way, Jonathan, are you at the point now that you're at 30-ish total cost analysis that we're saving you time, or is it still not saving you time? What are your thoughts? So be candid. I really want to. I'm going to interview you again in 30 days, so we can keep this conversation going. Where are you at right now?
Yeah, I think that right now it's saving time from the aspect of as many customer questions and maybe rebuttals of our original quotes. So that's been good. I don't know if I'm efficient, and I'll just be honest with you. I don't know if I'm efficient enough to say that I have measurable time savings right now, but I do believe that it's not taking me any more time. I believe that it's not the system, it's my system, it's my mentality. I got to continue to change because I'm used to doing one way of, I'm used to making my notes on a piece of paper with the client in front of me as opposed to, flipping my computer screen around and doing the TCA. And so from my standpoint, it's just a matter of systematic changing and habits being changed. But it's not that it's harder to do. It's just that my human side needs to change and come alongside the goal, And so, if that makes sense.
It makes perfect sense. First of all, if you got value from this conversation, like it, you're watching it on YouTube, give us a like, share it with your team. For all the branch managers and managers that watch this, and you have loan officers who haven't created 20 or more total cost analysis, this is a great conversation. Jonathan is an incredibly credible mortgage professional. I think a lot of people can relate to you, Jonathan. And I know we're excited to have you on the other side of, right now you're kind of beginner to novice. Can't wait till you become a mentor within our community and start really being someone who can mentor other mortgage coaches. For now, you need mentors. So, I'm here for you. And if I can connect you with anyone else in our community to do some masterminding with, let me know. And let's just have another conversation like this 30 or 60 days from now, and see how the mortgage coach habit is delivering value. Think of some stories as they come up, and then, like I said, reach out to our team if there's anything we can do to help you.
That sounds perfect. I love the idea because that's going to hold me more accountable. 30, 60 days, I'm going to have a good report for you. So I love it.
You think that was a part of my strategy here?
Yeah.
No,
oh, yeah.
Kidding. No, I'm kidding with you.
Love
it.
Hey,
thanks. And next time I'm at Notre Dame, I will definitely come by and say hi.
Sounds good. Have a good one.
Take care.